Okay, cool, good. So first of all, good morning and thank you for the invitation. Uh, First of all, I just want to say I hope everybody's safe. This is a difficult situation for everybody. I hope your loved ones, your family, your friends, your coworkers, everybody's safe right now. Uh, so, so let's talk about this. Let's take a little early view of the impact of COVID-19 on the economy. I know for most of us, it seems I was going over the information, and it seems like it's been, I think for everybody, I don't know, for me, it seems like it's been months right now, right? Instead of it just being actually just weeks, but it seems it's like an eternity, right? Of the things that are happening in the economy. So first of all, let's talk about this. This crisis is not going to weather, right? The shock is going to be large. We've seen the initial numbers, the initial unemployment insurance claims. I was speaking to Chris earlier about the forward price, oil price. It became negative for the first time for the month of May. That never happened before. So we've seen a lot of unprecedented things we've never seen in the past, right? So basically, the output loss we're going to have during this crisis, let's call it the Great Lockdown, is going to dwarf the loss we achieved during the great financial crisis, or the last recession. So this is going to be greater than the financial crisis. The issue here that makes it harder for everybody, even economists including, is how can you forecast? How can I plan ahead due to the great uncertainty surrounding everything, right? This crisis has been caused because of a health crisis, right? And we're shutting down the economy because of this, right? The idea behind this is the idea is to save lives. And since we're still, we don't know the duration of it, and we don't know the intensity of the shock to the economy of this health crisis. We're still waiting on the idea of reopening the economy, and we don't know, actually, okay, reopen the economy. Let's say we start reopening the economy, and what happens if the number of cases starts to go up? What happens if in the fall the number of cases start to go up? So again, what's going to happen? What's going forward? We don't have that certainty of knowing what's going to happen, especially since we don't have a vaccine currently, right? Now, this is different, right? Economic policy is going to be different because here you have a combination of healthcare policy and economic policy, right? We're facing a health emergency, and we have to initially contain the measures of the health crisis. So think about all of these issues, right? So that's why you see initially all this uncertainty on regarding the financial markets. Now, before this, investment by private firms was historically low. So again, if I'm a company, of course I'm not going to invest in these times due to the great uncertainty we're facing. Okay? So the crisis will need to be dealt in two phases. We're currently in the containment and stabilization phase. We're not in the recovery phase. We were still on the containment and stabilization phase. Now, for Texas, COVID cases. Right now, the objective of the Great Lockdown, why are we locked down? Because we want that curve of cases to flatten out, right? But look at the current data we have for Texas. It's actually not flattening out yet. It's still showing that upper increase in the number of cases for Texas. How about deaths? Still, the increase in deaths is increasing. The curve, it's not leveling off. How about for Austin? The number of cases in Austin, as you can see, also it's still increasing, right? How about deaths in Austin? Also, unfortunately, still are increasing. So we haven't seen that plateauing, that peak, where you can see that number of cases reaching a limit and actually falling. That would be a good indicator of future reactivation of the economy and the opening of the economy, right? Now, this is important. How many people can actually work remotely from home, right? So these are the percentages for U.S. Texas, and it includes the major MSAs. As you can see right away at the bottom of it, look at Austin. Austin has a comparative advantage with respect to the state. Why? The industry mix, of high-tech jobs in the Austin MSA that allow people to work at home versus other parts of the state. 48%, that's the highest. For Texas, it's around 37% of the state. So think about all these people that can't work from home, right? Those people are in danger of losing their jobs, right? Now, if you look at by non-degree, with college degree, if you're a college degree, you're better off. That would make sense. Income levels. So who's going to be more affected, right? People with lower income levels, lower education levels, and again, and that affects also the regions, right? And also the industry mix. Look at the case of Houston. Houston, for a major MSA, it has a very low percentage of people who can work from home. Again, also San Antonio. So 2020, global used economies, we're in a recession, right? The recession started the March 26th of the second half of the month of March. We're currently in a recession. The economy will shrink in 2020. The recovery is expected for 2021. Of course, this is expecting that we can control the spread of the disease, right? So we still have a considerable uncertainty about the strength and the rebound of the economy. The longer it lasts, the worse it can be. That's the issue, right? Right now, all the measures, the government policies, the Fed, the U.S. Treasury are trying to implement are to give us a bridge, right, between when the economy is closed and when we reopen the economy. Now, these are the outlooks, job growth, economic outlook projections for 2020. Of course, these could change, right? So let's look at world GDP. It's expected to fall by 3%, right? But how about the U.S.? I know we've seen a lot. There's a lot of forecasts for the U.S. economy, right? And right now, I think I'm using the International Monetary Fund. Why? Because in the past, they've done a really good job of forecasting U.S. growth. For the U.S. economy, the growth rate for 2020 is expected to fall around 6% in 2020. So that's a major decline in output for the U.S. economy. Again, this is, if you look at all the major industrial countries, from Germany to Japan to UK, Canada, negative numbers. Again, look at emerging developing countries, we see that negative numbers. Mexico, our major trading partner in Texas, don't forget that Texas is the #1 exporting state in the country. That's another whammy for the Texas economy. Texas exports are going to be hurt. So we see the Mexican economy is going to grow almost minus 6.6% for 2020. So again, unfortunately, much worse outcomes can be possible, and they could be even more likely, right? Depending on the duration and if the cases come back in the fall. People initially were optimistic. They mentioned a V recovery. Now it seems more like an L recovery. And people have even talked about a double recovery, right? Maybe like you come back, and then if cases come back and we have to close or something happens, we can have a small downturn again. Basically, it would look like, for people who live here in Texas, it would look like the 1980s. If you remember the initial fall in the oil prices in 80, 81, 82, and then they fell again in 85, 86. So you had like a V economy. That was a different economy for Texas. We're more dependent on oil than we are currently. But still, there's all these scenarios currently there. So again, why? What happens if the pandemic and containment last longer? The economy has hit more severely. I'm worried right now that we could be losing people from the labor force, right? People can actually be leaving the labor force, and that would have another effect, right? That would have caused more duration of the negative impacts. Again, tight financial conditions can persist, and lingering effects due to the firm closures. Some companies will unfortunately will probably close, and the extended unemployment. So how about Texas? How's our state going to do? I mentioned earlier, we're being hit by a double whammy. We have the severe contraction in the U.S. economy, and also we have the drastic decline in oil prices. You can also argue maybe it could be even a triple whammy, right? We're the #1 exporting state in the country. Texas exports are going to be hurt. So what's the expected growth of the U.S. economy in 2020? Whatever the U.S. economy is, and less, or in other words, worse. If the U.S. economy decreases by -6%, Texas will probably decrease by more than 6% in 2020. To give you an idea. So when you see U.S. economy forecasts, right away think about Texas. Okay, the U.S. economy is expected to fall by 6.5, then Texas will fall more than 6.5. So the early data, what do we currently know? What's the actual numbers we're seeing instead of just speculating and forecasting based on, I think this is going to happen. The actual numbers, right? Right now, I just updated this today. These numbers are the most recent numbers. How many jobs have been lost since March 16 to April 18 here in Texas? About 1.1 million Texans have lost their jobs in the state of Texas currently. And in the U.S., 23 million people have lost their jobs in a matter of weeks, to show you the impact of this recession. I've never seen these numbers. This is incredible numbers, by the way. So April, what we see in the U.S., I'll show you the graphs in a minute. Interestingly, in the U.S., you saw kind of a plateau of unemployment claims, of people reaching unemployment claims, and it's starting to decline. They're still at a high number, but you saw an increase, and then yes, high numbers but declining. What we've seen in Texas, interestingly, is because why? Because we were hit later by the pandemic, right? Also, we've heard all these stories of people trying to declare themselves unemployed or register themselves unemployed, but the system is overwhelmed currently, right? People are struggling to unfortunately to declare themselves or register as unemployed. So what we've seen in Texas is actually last week they kind of fell, but now they surged a little bit more to 298,000 unemployment claims in the week of April 18th. So we see here the changes. So going back to my point, Texas experienced an increase in the number week to week of unemployment insurance claims versus the U.S. that fell. Now annual numbers, of course, are higher. Now this is the graph. This is an impressive graph. I have it all the way to 2000. So look at the prior recessions. 2001, we don't see a peak on insurance claims. We see a peak in 2008. That was the Great Recession, the financial crisis. We see that peak. That 2017 peak we see, what was that? That was Harvey, right? It affected Houston, but that was just localized in Houston. That didn't happen in Texas. Look at the values after March 23rd for Texas unemployment claims. Look at that surge in that curve, unemployment claims. This is historical. We've never seen this. This is impressive. How about if we look at it by MSA? How many people have lost their jobs in Austin, right? Currently about almost 32,000 people have lost their jobs from March 26th to April 11th. It's lagging a week behind. The major losses, bigger cities, you expect Dallas-Fort Worth and Houston, where the major losses are focused. The last known number for insurance claims in Austin for the week of April 18th, you saw around 7,000 people losing their jobs, unfortunately. And we look at the amounts, the weekly change. Yes, they kind of decreased. I can expect an increase for this week, but these are the numbers. No, this is the Austin graph of unemployment insurance claims. Spike number. This is historical for Austin also. Look at the graph. All the way to 2016, we've never seen this amount. If I have the graph all the way to 2001, you would see the same amount, this historical high in insurance claims. Now, I just want to show you the composition of who's registering themselves as unemployed. So look at the composition by industry. This is a picture of the people of where are the insurance claims coming from. Let's look at the week of the 21st of March. You can see right away the majority of the insurance claims were from the accommodation and food services industries, right? You would expect that, right? Leisure and hospitality would be the first ones to lay people off. But look at the change through time. Look at the week of 18. Now we see a different composition of the people that are being unemployed. From that, still accommodation and food services is a high number, but now we have people in the retail trade, jobs, healthcare and social assistance, administration and support and waste management, manufacturing, construction. But that shows you that the longer this is last, it starts to affect other industries, right? Not just those the initial wage workers, right? So unemployment rates based on the unemployment insurance claims. What are the unemployment? What would be the current number of people unemployed? For the U.S., it would be around 18%, almost 19% in the U.S. For Texas, 13%. For Austin, the benefits you can see right away. You can get an idea right now that Austin is weathering initially the pandemic better than the U.S. and the other major MSAs in Texas. For Austin right now, the unemployment rate would be around 4.6%. How about Dallas Fort Worth? 8.2, 9.0 for Houston. You'd expect that because of the other high prices of the oil industry. San Antonio around 8.4%. Now, the latest numbers on job creation for Austin. Austin lost around 8,000 jobs in the month of March, from February to March. People, 8,000 jobs were lost in the MSA of Austin. Now you can see right away where are the losses coming from. Mentioned that earlier, leisure and hospitality. That's where the high number of insurance claims are coming from, and also followed by education and health services. So service providing. Still, there wasn't a loss in goods producing, manufacturing, but those losses are definitely going to show up in the month of April, and definitely May. Now let's talk about housing sales. So we can see the initial decline in sales, the negative effect of COVID-19 on month-over-month seasonally adjusted housing sales. Texas, they fell by around 7.1% in the month of March. In Austin, around 8.1%. Dallas Fort Worth, 7.7%. San Antonio, 6.5%. So you can see the initial effects of the shock. Of course, the numbers going forward will be unfortunately worse, right? We're expecting double-digit declines in April and in May. How about housing prices? This is the latest number of housing prices, goes up to March. As you can see, the housing prices were not affected. You know, for housing prices to be affected, people ask me this question a lot. What's going to happen to values and housing prices? Well, you know, housing prices, it's really difficult for them to register a big decrease, right? They're based more on long-run effects on the economy, right? This is still seen as a temporary short-run effect. For housing prices to actually start to decline and be affected, it has to be a long-term, short-term effect. What am I talking about? If suddenly, think about sectors or regions where people don't want to live there anymore, where the industry is dying. But that's where you see land values or housing prices decline through time, right? But if people still want to move there, people still want to live there, you're still going to see a strong positive number in housing prices. Now, don't get me wrong, of course, we're not going to see those increases, right? But still doesn't mean we're going to see a humongous decline in housing prices. A months of inventory, interesting, for the last number of May, but actually still you can see these are seasonally adjusted numbers. They didn't go up in the month of March. Of course, let's see what happens. We're still expecting them. Let's see what happens with the number of listings, right? And people, because it's going to be a supply and demand effect, right? People just sometimes think about the demand effect. Oh, people are not going to want to buy a home during the pandemic, of course, but also don't forget, people don't want to sell a home during the pandemic, right? So going forward, how does Austin look like? What's the growth? Again, Austin is expected to do better than the U.S. economy, right? If the U.S. economy falls by around 6%, Austin will probably maybe fell a few percentage points be below that. You know, that's the idea. So it's going to be better than the U.S. economy. Still a strong negative shock to the Austin economy. So I mentioned earlier, why is Austin expected to weather the pandemic better than the state and other major MSAs? the industrial mix of high-tech jobs. 48% of the workers can work remotely, the highest percentage of the state. And how about housing sales for the month of April, May? They could actually fall, they could register double-digit declines. In the month of April, they could be higher than 10% declines. For the month of May, they could be higher than 20% declines. I'm trying to work at trying to estimate the most current forecast. I'll let you know when I have the numbers for those 2 months, and I'll share with you the actual numbers. But the initial forecast that I've been working with, the monthly numbers are around those ranges for the month of April and the month of May. So that kind of finishes my presentation based on the current data we have and the expectations going forward. Of course, there's a lot of uncertainty going forward of when the economy is reopening, and once it's reopened, when is the economy trying to go back to normal, right?
That's awesome, Dr. Torres. Thank you so much. Apologies there at the very beginning. Just as I was about to introduce you, my internet cut out for a second.
No worries.
But that was fantastic information. I thought I'd open it up to Kay and her agents to do some Q&A. We had some late joiners because of login issues as well as some other commitments. So would that be all right? So we could field some questions and answers?
Yeah, no problem. No,
awesome,
definitely.
fantastic. All right. So Bill Freeman asks, does these numbers reflect the city of Austin itself or surrounding cities as well?
So these numbers reflect the MSA of Austin. When I'm talking about Austin, I was talking about the MSA the Austin MSA.
Perfect. Yeah. So that'd be Austin, Round Rock. So Greater Austin in effect.
Yes, right? Austin and Round Rock, correct.
Perfect. Do we have any other questions? And feel free for the folks that came a little later, if there's anything you missed out, please, we're here to be a resource to you. And if there's something you want us to go back over, that'd be great. So Kim Beckham asks, why is the percentage of decline in home sales for Austin greater than the other areas when our other numbers are lower?
So that's a good question. The numbers in March, there was something happened that didn't happen in regard to other sectors. You were doing so well. So think about Austin market was doing much better than Austin and San Antonio, basically, were the two hottest markets. They were doing so well. So sometimes it hit you harder than other the initial shot, like the initial fall was a bit higher than compared to the other regions. But that's the initial seasonally adjusted numbers. By forecast numbers for Austin, overall forecast for Austin and compared to the state and other is less the drop than compared to Houston, compared to San Antonio, compared to for Dallas-Fort Worth, and even for Texas, for the Austin MSA.
Dr. Torres, this is Laz Garcia. Can you hear me okay?
Yes, Laz. How are you?
Good. Thank you. Again, thank you for your time as well. Quick question. We've heard the reference that this is a service-based recession, and the recovery is going to be unlike anything we've seen recovery or in prior history, since we don't really have history to look back on something like this. Do you see the recovery as a V curve or a U curve? Are your models indicating what that would look like?
So right now, I would be between a V, but changing more like between a V and an L. I don't know if that makes sense. I would be between those right now. I think initially, like I mentioned earlier, people will say there was a V. They were more optimistic. There was no, the data wasn't out there. People didn't know how much longer it was going to last. But I think people are now moving more towards an L. it depends on the L, right? There's different types of L's, right? But I think right now people are between that V and that L type of recovery. Now, I mentioned earlier, people, I've heard this, I heard it from some other economists, like we can also have a W also, right? Maybe if the cases come back in the fall, something could have that could be another negative effect, and maybe we could have like a little W recovery instead. Hopefully that's not happened, but it could happen, right? We have to be, all of us, look, everybody has to be aware. Don't be shocked, by the way. These couple of weeks, every day I look at I look at Squawk Box, I look at Bloomberg, and it gets to a point where like I'm not shocked anymore. Like the forward price in May going negative. That was the first time I think in history that ever happened, right? Negative oil prices. So negative forward oil prices, right? So that was impressive. So just recommendation. The people that are here, I think, that shows you that you're interested in what's going to happen. So continue to be informed, right? Read, look, see what's happening with the market, because this is like no other crisis, and we have to be aware of what's happening in our surroundings, right?
Dr. Torres, it's Chris O'Shea. Got a question. So what are your thoughts? It's a two-part question. What are your thoughts on the lender requirements increasing to get a mortgage, and how will that affect? And then secondarily, how is the volatility of the other equities and commodities relative to real estate? And do you think that maybe capital flight into, say, a less volatile investment, maybe like real estate, would actually be a boost to us? What are your thoughts?
So first of all, like the first question. Well, of course, that's if you're asking for more requirements. Well, that's going back when we lived through this, to the recovery phase of the 2008 and 2009 financial crisis. What happened? Initially, after that new regulation was introduced, what happened to mortgage applications, right? How much long did it take the time to recover, and for financial, for people to have access to mortgages? So think about it this way: it's you have more regulation. You're gonna have, that's a negative effect, and then think about also from the people that are they're trying to get a mortgage. If you were hurt during the financial crisis, during this crisis, it's going to be making it more difficult for you to even try to get a mortgage when the recovery comes back, right? So I think that would be a negative effect on that. Second of all, yes, volatility wise, especially because of the uncertainty right now, buying a house, the return on that. Now, buying a house, there's a lot of factors when you try to buy a house, because it's not only an investment, it's also a consumption, right? And you live there, right? You consume it, you live there. So as an alternative investment right now, compared to the stock market, we're still right now we're having so much uncertainty and short run negative shock, right? We don't know in the long run what's gonna happen, right? So it's difficult to say, This question always goes back to, like, you prefer to own a house, right, or invest in a house, or purchase stocks, right? So I couldn't answer it, like, oh yeah, buy a house right now, the certainty, buy a house, but as an alternative, right? Of course, definitely, you're not going to see those price fluctuations in a house, right? In the short run, right? We're not going to see like a stock market where you go down. Now, the stock market, if you don't like volatility, right? Then maybe in the short run, maybe for you right now, a better investment would be to purchase a house, especially taking advantage of the historical low mortgage rates. By the way, I just in that caveat, I'm one of those persons that took advantage of it and refinanced, right? Now that's going to have an effect going forward, because a lot of us are refinancing the ones that we can. So that would affect our preference to move to a new house, right? Or purchase a new home, right? Going forward, once the recovery starts.
Thank you, Dr. Torres. Kevin Roy asks, I would imagine the May, June numbers up for the real estate are going to be off as the pipeline of contract and the loop closed. Do you expect sale prices to decrease at the same rate?
I would say no. I wouldn't say that they would decrease at the same rate. I think, again, to my point, I think historically, through time, housing prices are not that volatile and don't fall that much. Even during the financial crisis, most of you lived that 2008, 2009 financial crisis, or it didn't. Housing prices did not decline that much, right? It wasn't like, oh my God, the prices. Housing sales do register that shock, that volatility. People stop buying houses, but the value of that home, the price of that home, there's other factors involved there, right? So I wouldn't expect them to fall as much as the declines in the housing sales. In fact, today, if you saw the data today, the new data for I was looking at Squawk Box. The new data for new home sales for the U.S. came out. Double-digit decline. I think it was 9% or maybe 15% decline. New home sales for the U.S. But interestingly, the price actually went up in those numbers. The new home sales. So prices didn't go down. The sales did go down, but actually prices did not decline.
Probably because there was such a lack of inventory in the first place.
Exactly. So if you look at the months of inventory, you see that the months of inventory are low, right? So think about one of the benefits of one of the things, our economy, our housing market here in the state and Austin, especially Austin, was so strong. That gives us a good, a better way to maneuver through this crisis. Bad if we were in a recession, right? The Austin economy wasn't doing well. The Texas economy was doing well. And then we were hit by this, then that would be even worse, right? But unfortunately, that's why the differences between the housing numbers, the statewide housing numbers compared to the national housing numbers, why are we better off than the nation right now? Because we're better off economically, and the housing markets we're going to do great. Our forecast before this happened for 2020 was going to be another historical year in the housing market, and that included Austin, right? One of the major drivers was going to be for the U.S. economy and the state economy in 2020 was going to be the housing market before COVID-19 hit.
So I would say it would be safe to assume that record year that we were potentially going to have just maybe moved to the right because the underlying factors remain the same. The demand remains the same. The high-tech professionals are still moving to Austin. So once the sentiment settles and we get through this, then we get back on track and we get that W with a new high eventually.
Exactly. If the assumptions you're saying happen, right, you're true, right? If people, if the economy comes back, if we have all these things, yes. But again, the uncertainty, that's the problem, right? There's the issue, right? How much would the pandemic last, right? The more it lasts, the more the lingering effects will have on the economy and in high tech also, right? Because, a lot of these are startups, they need financing, they need capital investment into them. So that could affect them, right? So again, I would say yes, but hopefully yes. And that's a certainty we could go back to normal, but it depends on other factors, right? But yes, I would definitely prefer to be in Austin than in another MSA or another part of the country right now, right?
Absolutely, I agree. Do we have any other questions, Kay?
I do have a question. What do you think of the foreclosures? Are we going to see a wave of the foreclosures come in? If it comes in, how long should we expect them to come within? I know it's not going to be there in the next 3-4 months. Can we expect them to come like next year, 12 months, 18 months? Or are we going to see any?
So again, just in stat, before the COVID-19, Texas was, I think, one of the lowest underwater, states in the nation. The percentage was, I think, 7%, if my memory serves me right. So we were in the lowest, right? So again, foreclosures would increase, but here the issue is the duration of it, right? How much longer do people find themselves unemployed, right? And how much of the people that have more secure jobs, that have a mortgage, start being laid off, right? That's the problem, right? So currently with the forbearance, all these policies that have been implemented are a bridge, right, to maintain this alive, right, while this lasts. Now, the problem is the duration, the length, right? If it lasts longer, then that's when you start to see the problems of foreclosure. Right? So I don't see it currently. I don't see it as a big issue, especially prices are not going down, right? You still have equity in your home. You're still gaining equity, but also you're still maintaining your job, right? Now, if it lasts longer, then that's when we start seeing issues because, what's going to happen? I can't pay my mortgage, right? I used to, but now what's going to happen? We have that forbearance of 3-4 months of forbearance. What happens if it lasts 5-6 months, right? Now, also what happens if the longer it lasts, the longer it's also harder for me to find a job when it comes back, right? So these are the factors of play.
Okay, thank you.
To that note, Doctor, do you see that if this does go a little longer, that deferment maybe becomes an option for lenders and that the Fed goes into the secondary market when we talk about mortgages to allow deferment to happen, thus giving people a little more of a runway with the mortgages to prevent foreclosures?
I think the Fed, the government, they're doing everything right now. I think they have the Fed, like they said, like they mentioned earlier, has brought all the big guns, right? It depends on if it lasts longer. I think the Fed will start to do other things, right? I think the options are in the table, things that we haven't seen in the past, right? I think the financial crisis showed the Fed that here the idea is to stop the economy from entering a depression, right? And from this to becoming a worse situation. So I think it would, like you mentioned earlier, if it lasts longer, it would depend on what's happening for the Fed to intervene. Like I said, it wouldn't surprise me if it starts using, using new tools it hasn't used in the past, right?
Thank you. Do we have any other questions? Okay. Well, once again, Dr. Torres, Kate, do we have any other questions, or is it a good time to?
I just want to say thank you so much, Dr. Torres. Again, I really appreciate you coming, giving your time to us. And Christian, thank you so much for making that happen. Really appreciate it. So I'm sure, a lot of us will take a lot from this presentation. Appreciate it. Thank you. And thank you for all the wonderful agents that attended.
Yes, absolutely. Thank you everyone for attending. Thank you very much, Dr. Torres. Everybody, I will get an email list from Kay, and I will send out the recording for this session so you can look at the slides at your leisure and gather the information that you want from it. And again, once again, Dr. Torres, thank you very much. It's a pleasure to hear your expertise. And on behalf of myself, Christian O'Shea, and Laz Garcia from First American Title, we're here to serve you guys, and so it's a pleasure to do so. So with that, have a wonderful day, everybody. Have a lovely weekend coming up, and I hope you guys have some open houses and get some deals going. So take care, everybody.
Thank you.
Thank you.
Thank you, Dr. Torres.